Vincenzo's Gold Crypto Investing, Fiscal, yes, and Monetary Policy, yes. That's right, Fiscal and Monetary Policy Fridays. About to end, not a lot of videos today. Short clips because it's the only way I can get them out at Ford Romeo with them union assholes. But we gave you the housing market earlier, or the housing U.S. home supply, right? Telling you that there's going to be a housing market collapse in the United States. Just like we saw in 06, 7, 8, 9. But this time it's going to be worse. Yeah. Oh, shit, son. What do we got? U.S. 10-year treasuries. You can see they briefly started to pump after the COVID collapse. If we isolate in, oh, yeah, that's right. We said isolate. You can see they started to pump from 0.6% interest on a treasury, which I don't know why you'd buy a 10-year treasury when you're only getting 0.5% interest. Then it ballooned all the way up to 1.5%, and that's already too high. It's too high of interest. Now it's starting to come back down. We'll keep an eye on that. The higher that gets, the more expensive U.S. debt gets, and the economy rolls over. U.S., what do we got here? U.S. Euro foreign exchange rate. So you can see the Euro's been strengthening against the dollar this year from its COVID low, right? The 10-year, the dollar's been strengthening over the euro. 10 years ago, you could get 1.4 euros to the dollar. Now you can only get 1.2 euros to the dollar, right? Or the euro's actually been strengthening against the dollar. The dollar's been weakening against the euro, right? But recently the dollar was strengthening against the euro during COVID, but now it's coming back down. Unemployment. See a big COVID spike. Zoom in. You can see it's leveling off, but it's significantly higher than the 5% we were at before. Now we're at about 6.5%, and it looks to me like it's about to break back up, right? After a huge collapse, after we opened up the economy. But you can already see the net jobs that we lost that we're never going to get back, right? And this is only going to get worse. You can see every time it comes down, it pumps back up with unemployment, and it comes back down, but it's always higher with less people working than prior. This trend continues up in the mean, and it's going to continue up as the U.S. pays people not to work. And then initial jobless claims, right? You can see 400,000 people without work that they're counting, but if you're on there long enough, they just stop counting you, right? So say you're unemployed today in 9 months. If you just haven't looked for work, they just don't even count you as unemployed anymore. You know what I mean? It's the fucking joke of that. Look at the median sale price of the U.S. homes. This is what I'm talking about. Look at this. And you guys don't think there's a collapse coming. I mean, there's a major United States housing market collapse coming. Look at this. The median home, 300. That's not even. Oh, we need to go out more. Look at this. $375,000. $341,000 is the median. $347,000. In 09, when it peaked, it was at $257,000. Now we're almost $400,000 for the median home, right? Nobody can afford that. These are going to collapse, and I expect the median home price to come all the way back down here to 1990 levels, right? At the very minimum down to here, but I expect a major breakdown and a financial collapse, unless we just have hyperinflation, and then, this thing might as well be worth $1 because you're going to be broke, right? If a window breaks in your house, you're not going to be able to afford to fix it, and these houses are going to become decrepit piles of shit. Monthly supply of houses in the United States. Blue is monthly supply of homes in the United States. And then red is monthly supply of homes in the all different months. Oh, come on. You can see we had the most homes back here in supply in August of 2008, right before the collapse. But right before people started, see, in late 2005, everyone said the housing market could never go down because we didn't have a lot of homes. But you can see we're at 2.5. That was the handles I was talking about earlier. But we quickly rose from early 2005, or early 2000, mid 2003 at 3.8 to by 2006, we tripled that to 6.7. So you see how fast it rises? And that's the same spot we're at now. If you look here, we're way down right now, but we're starting to come up in these last few screens. And in the next year, year and a half, you're going to see one of these type rises, where in 2005, we were way down there at 4.3, but by 2008, we were at 11.2 when we had a housing market collapse the last 3 years. I think we're right here, right now, in January 2006, right? Or a little bit before January. We're in like mid to late 2006 time frame in the U.S. right now with the housing market. And you're going to see over the next 12 to 18 months, as we isolate closer and make this look a little bit better, we're going to see these home sales, each candle go higher, 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 higher until we're at 6, 7, 8. In about 6 to 10 months, we're going to be at about 7 to 8. And then in 12 to 18 months, we're going to be pushing 9 to maybe even way up there at the peak. And we're going to be in the midst of a raging housing market collapse. We have, I think, there's 10 million, or what was it, 3 to 5 million people in forbearance already or foreclosure. As soon as they take off the government can't kick anybody out of the house rules. It's worse than '06. There's way more debt. Way more people have homes they can't afford. And it's going to be a disaster in U.S. Housing and real estate for a bunch of people that paid for houses they can't afford. And when this rolls over on them again, it's going to be very painful for them. But the smart guy that could see this coming, that's been lying in the weeds like a snake, will jump up and snatch, like a venomous viper, its prey, which is a cheap house for pennies on the dollar. And a once-in-a-lifetime generational wealth transfer will take place to the people that were prepared and have a financial education and understand what's happened and why it's happened and how to capitalize. Once again, a major U.S. housing collapse is on the horizon. The day and week that it happens, nobody knows, but the homes are starting to build up. If you look at Realtor, they say there's no homes. Let's just look and see the no homes they're talking about. Hold on, look at all these. The more you zoom in, the more homes there are. Come on, populate my map. Let's zoom on in here. Give me my homes. Vincenzo wants, look at this. No matter where you go, the homes pop up. Does this look like the Detroit metropolitan area has a lack of homes for sale? Let's zoom in even closer and watch how many more homes pop up. Does this look like we have a lack of homes on the market? Honestly, come on, guys. Come on. There is not a lack of home problem, right? Let's go to Toledo. See if there's a lack of homes for sale problem. There's so many homes. Look at this. You're going to fucking tell me the problem that the prices are rising in homes is supply and demand issue? Look at all the motherfucking houses for sale. They're everywhere. Let's go to Chicago. Here. It's not just a region. Look at it. Let's go to New York. See how many fucking homes are for sale in New York. You know? It's a joke. There's houses for sale everywhere. Look at this. You're telling me the problem, there ain't no lack of homes. There's an oversupply of homes. The more you zoom in, the more homes that pop up. It's just incredible. It's like little checkers out. Look at this. You're telling me there's a housing shortage, and that's why the prices of balloons. You're out of your fucking mind. There's not an undersupply of houses. We have an oversupply of homes, and too many people that are in homes that can't afford them and shouldn't be there. And that's the reason that prices are going up, and Joe Biden's printing $8 trillion in inflation in his first year, and it's not over yet. These homes and this oversupply of homes that aren't being sold are going to start lingering on the market month over month, year over year. And as the months go on now, and these homes sit here and don't get sold, the prices are going to start to be chopped down, chopped down, chopped down 10, 20, 30, 40% month, in a 3-month rolling period, because there obviously is not a lack of home problem. We have too many houses on the market, and it's starting to saturate the market no matter where you go. And the housing market in the U.S. is going to roll over and collapse, and it's going to be phenomenal. Just like 06, 7, and 8, and 9, when nobody seen it coming. We're in early to mid 2006 all over again. Just about to happen, and nobody sees it coming. Look at all these homes. Yeah, lack of homes, my ass. Oversupply of homes, undersupply of buyers that can afford. Moratoriums are going to come off to where you can be evicted. There's 3 to 5 million people in forbearance already, in foreclosure. It's a perfect storm, and it's going to be a housing market collapse all over again. Keep with Vincenzo's Go Crypto Investing for up to date on the housing market. As this whole thing starts to unravel and unfold, I'll be on top of it for you at Vincenzo's Go Crypto Investing. Peace and love. Peace and love.